Now let's get into some real examples on how you can make money and how I've made money using this strategy. So here's example number 1. The stock is SPY. The contract is a 550 strike price call contract that expired 9/16. And I'm mentioning that this is not 2 weeks out because later as we go into the course, I will mention that I recommend you choosing stock option contracts that have an expiration date of at least 2 weeks out. However, with this, it was more of a scalp for me. I bought it on 9/11 and the expiration date was 9/16, so that was not a 2 weeks out contract. However, it still worked out for me. It can still work out for you. It's just not my top recommendation. This arrow right here is where I got in, and this arrow up here is where I got out. So as you can see, I was riding the trend, that's why I call it trend rider, for this duration of time. I let it ride pretty much the whole day. By the time I got in, it was like 11, and then I got out at 4. It upheld the green cloud here, and we will get into why that's so important later. But as you can see, it was riding that the entire time, so that's why I stayed in, and that's essentially the strategy. This is what the option contract looks like on Robinhood. This is where I placed this trade on my Robinhood account. You can see from my position, I had one contract. The average cost is what I bought the contract for. It's average cost because if I were to buy more contracts at different prices, it would be the average of that. But since I got one contract, the average cost is the price that I paid for that one contract, which was $140. But remember, we have to multiply that by 100 or move the decimal place over 2 places to the right because that is the option contract. So the actual price that I paid, which is the premium price, is $140. So I paid $140 for this one contract. The current price at the time of this screenshot for this contract was $575, which is $575 premium. Selling it back to the market right now, it has a market value of $575. I bought it for $140. I can now sell it for $575. And down here, you can see my total return and my today's return. Because I bought it the same day that I sold it, these numbers are the same. I made a profit of $431 on my initial premium, which is a over 300% return with this one option contract holding it for 5 hours for the day. And that is just one example of how this strategy can work for you.